Today, our guest is Jed Meyer. Jed leads St. Cloud Financial Credit Union, a five branch, $425 million institution serving 28,000 members in central Minnesota. He's been at the helm for nearly 12 years, with 2025 being the best year in the credit union's 96-year history. What makes Jed the right person for this conversation is that this growth is driven by member experience and community trust in a market where word of mouth and referrals are the growth engine. Jed, welcome to the show.
Hey, thanks for having me.
All right, so let's start with the headline here, which is you've driven a 400% organic growth over the nearly 12 years you've been at St. Cloud Financial. I'm curious, what led to 2025 being the best year yet?
We're a growth-minded organization, and so we really look at growth even over our ROA, over our net income, over our net worth ratio. When I got here, net worth was low, and the board had to make a choice, right? You guys want to grow, or do you want me to grow that first before I grow, and kind of where that's at? The reason why we're able to grow or have those sporadic growths is we're always growing, right? We've never stopped growing since I've come here. The board gave me really a goal of perpetual organization, of which we also had to define what they meant by that. And for them, it's intimately providing financial services 100 years from now in our community. As long as we're able to do that, they're not really worried about the form. So 2025 was really a year of a culmination of a lot of different strategies coming together, right? And, I have a very talented executive team for our size. It was part of my negotiation when I came here as the CEO to say I'm going to overinvest in a team, because if you want me to move that fast on the growth side, I can't be the center of the hourglass. I have to have people I trust and are able to run. And we've been able to attract everybody on my executive team has been at a $1 billion plus institution at a senior level in the past. What they love here is they get a better balance. They focus on their family first. And they get exposed to the organization because as you get bigger, your responsibilities are so big, you get a narrower piece of the pie to actually work within. And so having a really talented team back in 2020 really put us in a position to say, okay, we have some time on our hands here. We're dealing with obviously a pandemic, which is really taking a lot of human capital out of our organization, but it doesn't mean that we can't write strategies and start thinking with a vision as to where we're going to head. And we always do that here, but we were able to do that a little bit more. And two things that came out of that 2020 range timeframe were, where in our marketplace do we think we have access to gain more market penetration, right? So it came from a financial, running a fiduciary, a sound financial institution. But really, ultimately, how we do that is usually through culture and experience, like you just talked about. But we do talk in business terms first. And when we are in a community, we have 200,000 people in this MSA of St. Cloud. We have 28,000 members and 41 financial institutions, of which we're the third smallest in our community. Our brand is a point where I think if you win in our community, people think we're the biggest. So our brand's winning. So that gives a little bit of luxury. But really, 28,000 out of 200,000 people, how much market penetration should we expect to be able to obtain? And then how would we go obtain that differently than trading auto loans or checking accounts? Two things that came out of those meetings early on were there's 12% of our population of that 200,000 that were born in a different ethnic country. Okay, they have a different ethnicity. And so we started a multicultural division. We actually have some Sharia law products and some other things coming out this year as well. But we've been working on that for now 6 years. Since 2020, writing the strategy, identifying, doing focus groups, hiring talent, and kind of organically building into ourselves a little bit to say, hey, we want to create an experience. And the way that you create, the only way to go from high levels of service to an experience or a transformative experience is by customizing the high levels of service. And the second place that came out of that was blockchain and digital assets, and said, nobody in our community is trying to be number one in helping the consumers in that space. Let's go learn what this is, educate ourselves, and then identify, are we going to have a role? What would that role be? And how will we move forward? And ultimately, that's why we find ourselves kind of leading that area. And so last year was just a year where a lot of it all came together at the same time.
That's amazing. I appreciate you going through that journey, Jed. And I think it is hard because you have now much more diversity in members that you need to cater to and serve. And I think the calibration towards that makes sense. Maybe if we just take a step back, in the competitive landscape, who are you normally competing against? And the reason why I ask that is it's helpful to frame what does competition look like, and how do you stay relevant in a increasingly competitive landscape. And the thing that we're hearing from other credit unions and such is that um, basically expectations of what it means to do to bank with the credit union are changing, because especially with younger generations, they're used to more digital first experiences, using apps, maybe using neobanks and such, and also the set of values that they rely on to choose a bank may be different than older generations to some extent, right? And so it becomes challenging of how do you kind of go and stay relevant and remain relevant for another 96 or another 100 plus years, right? And so I'm curious what that competitive landscape looks like for you today, given the members that you have.
Yeah, no, I think that's a great question. I think we have a lot of sayings around here. One of them is we start with the member, we stay with the member, and we end with the member. And so when you're looking at competition and innovation, when you have that mindset and it's really baked into your strategic, into all of your goals, into our rules of engagement within our actual meetings, we have rules of engagement and how we operate, how we think, what our mindsets needs to be. You will learn very quickly that competition is not the way it was 25 years ago. Everybody's a competitor. I have a requirement for every one of my executives to spend 10% of their time studying industries outside of our industry, because this is about human behavior. What I often find in consumer or segments of customers is oftentimes they only value what you're providing them. Right. So people love convenience. Well, it's because it's the only thing that banks provided for a lot of years was convenience. And so that was the value proposition. And so we were compared on convenience, right? Because the reality is that some of the institutions, you might not be getting that service or that experience, right? So I try to break it down into simplistic things. Okay. So if there's price, there's convenience, right? And then there's service, right? Which I would throw experience into that now, right? That's consumer marketing 101, the most basic forms. That's how consumers make decisions. Every generation, all of them, they value those areas differently. And they do have their own set of what they're looking for in those areas. But some of it is on our side, because when we adjust and we show them what's possible, it's there. And I want to bring that into the technology space, right? What's happening in today's world? Change is happening faster, and it's than it's ever happened. And today is the slowest it's ever going to be again. So we know it's going to continue. So change is happening extremely quick. We know that these younger generations are putting a lot more value on community, on how you operate and how you act and who you are, the soul of your company, a little bit more than they are worried about the price and the convenience, which is great for us and great for credit unions because it is our competitive advantage, right? And that's really what we came in here and said, we're really good at service. We're going to become great at experience, right? One of our other sayings around here is we're not trying to revolutionize the industry, right, as a goal. It might be an outcome, but it's not a goal. Our goal simply is to meet our members where they're at and to know what that actually means. And when they're where they're at, where do they want to go next, and how do I get out ahead of them, and how do I deliver it in a way that's different than everybody else? Because if you've ever read the book Blue Ocean, right? Red Ocean, Blue Ocean. Have you ever read that book, right? It's a very simple concept of saying the world around me will always try to push me into the competitive red ocean with everybody else out there, right? But what I have to do is stand my grounds and say, no, technology is never going to be my value proposition at a $400 million credit union. On the same side, I would tell you, if I look at all billion-dollar plus credit unions and banks in my community, I think I have better technology than them. But it's not what we're banking on. That's an outcome. We're competing with them. But if our members are here because of our technology, it's just like price. If I get them here on technology, I got to keep them here on technology. If I get them here on price, unless I give them a different reason to stay, they're going to leave for price. And that's where the experience side comes in. So I will attract members through very traditional call to action type marketing, offering a rate that's best in the market or whatever it is. But when they get here, if I got them here on price or I got them here on a technology, I have to give them an experience that shows and differentiates us through action consistently over time. So when you throw technology in there, if you go back to convenience, price, and service, I have to provide the experience through the technology. That's my differentiator. I got to be able to do something because there's something someone else that people don't talk a lot about. And my background in psychology and some of the stuff and studies I've done in that world is really around human behavior. And one very innate thing within human beings is human connection is an important thing. It's actually what our vision statement is. We create meaningful differences through human connection. There's no financial thought process within our vision. That's our role in the community. We believe when our community is stronger, our members are stronger. And when our members are stronger, we're always stronger. And so we actually look at that as a driver, not just an outcome of our strategies. And if you look at over the last 15 years, do you know that the number of human interaction opportunities that you have has gone down by like 30%? Right? So the opportunities you have for human interaction are decreasing that far, and they're only speeding up. And people are craving that. So I came in 2014, created an experience-based culture, added technology, and people are like, not only do they have the convenience and the technology, but boy, the experience. And that's where the word of mouth has really taken off. And it really becomes your value differentiator because you have loneliness. We have all of the mental health stuff that we have. I'm a firm believer that a lot of that is because we don't have the human connection or the opportunity for it like we used to. And that is a business. I've always believed it's the right way to do business in banking because it's always bothered me how commoditized business is, right? We will make a better human decision over a business decision because I'm building a flywheel. Long-term ROI is what we care about, not short-term ROI. The fastest way to keep my core values on the wall is short-term ROI. It's when a business decision collides with what my values are, right? And I have to make a hard decision to say we're not going to take the business income because it's not the right thing to do for the human being. And the more we do that and the more we tell that story, it really invigorates people, especially in a world where human connection and good human connection is actually fleeting.
Chad, that's remarkable. I think the price and the convenience, I think that's a good way of describing it, right? I think the world has oriented around price and convenience. I think that's now re-indexing, particularly with AI becoming a bigger thing. More of our lives are being spent online, right? And now there's the question of how do you introduce more human to human experiences and those touch points. So I think my question here is like you do have 5 physical branches, you have digital experiences as well. You do serve, I believe 28,000 members at this point with a small but like really mighty team that you have. How do you operationalize human interaction so you could still deliver very high quality experiences while making sure that technology is helping enable basically the human to human interaction to be as beautiful as they can be, right? But I think that's like really the North Star that we keep hearing over and over again. But then it gets down to how do you actually do that? How do you operationalize technology to enable better human experiences?
First thing is nobody has a playbook on this. So it's okay to guess and be wrong. I think that's something we don't do enough, right? Like we'll take a directional, we'll observe, we'll stop, we'll reflect, we'll look at it, we'll adjust, and we'll correct. Too often, I think we're all looking for like, what's the answer to the test before I actually open the book, right? Like I want to actually have the answer. And I think in today's world, with how fast the world's moving, you got to be good at identifying risk. You got to be really good at quantifying and qualitatively giving analysis to risk so that you can move at 60% of knowledge. You can't wait till 80 or 90 any longer. You have to move and you got to be comfortable at that. And so my team knows that we'll move at 60 or 7%, 70% as soon as they're able to articulate that the end game decision of risk is nowhere in that equation. And so, we can look at a great business opportunity. If there's an end game decision, we won't even go down that path. But if there's real risk there that we think we can manage, we're going to do it. And we're going to fully understand that if we are wrong on every one of our assumptions and that risk is as bad as it can be, how bad it would hurt us, right? I say oftentimes it's like, if you really looked at it differently, I've been trying to break this place for about 12 years and just haven't been successful yet, right? It's a little bit different way of looking at it and how we're moving forward. And so, but going back to your point, and it's going to be, you're going to 100x that as AI becomes more important, right? How do you deliver, right? Because that's the whole important. But you also see it in AI, right? AI is really, really good at task orientation things, right? In mundane task orientation things. But if I was to give my frontline staff full range of ChatGPT, I'm really giving my 16-year-old a Lamborghini and asking her not to go over 35 miles an hour in the neighborhood she's driving in. Because there has to be identity context for AI to really deliver the human experience, right? So I always look at it more of a coworker extension when it involves the consumer, and more automated tasks that don't have an interaction can ultimately be done. But we have to solve the process of how is AI an extension of me? How is it 10xing Jed, not having it replace Jed, because that's where it's very, very impactful, right? But when you talk about operationalizing, let technology do what it's supposed to do. Convenient accuracy. Right? Accuracy does not drive trust. It just presents dissatisfaction. Okay, so nobody walks into a bank and says, "I want $100." They get $100. They walk out and they're like, "I can't believe it. I got $100. It's
Sure.
awesome."
Yeah.
But if I give them 99 or 101, they're going to be dissatisfied. Where am I going with that is convenience is a little bit the same way. Convenience, right? You do it faster than everybody else. And it is great. It does drive trust for a while, right? Because they can do it better and they're always can be counted on. But then the first time you don't do it, even if you're still faster than your other competitors, you've now set an expectation that becomes table stakes, right? So it's fleeting, right? The trust is fleeting there. Real trust comes through action and human interaction, the deepest levels. And so you got to mix that in there. So let technology do what it's going to do. Be very deliberate in your human strategies, right? We have a meaningful difference strategy. We've trained on it. We've funded it. We've created processes around it where my employees can actually do a meaningful difference for any of our members at any time without permission, right? They have one rule. Well, they have two technically. One is it has to be legal, ethical, moral. Okay. And the second one is they have to share the story. You cannot spend money out of the meaningful difference. You have to share the story. We have to build a flywheel with everybody else. We have to celebrate that as a team. We have to talk on it, and we got to keep upping our game as we continue to go. When we launched that in 2015, I put $10,000 into a GL. I had some of my competitors are like, you just put 10,000 into a GL, and you told your tellers there's no spending limit. They can do whatever they want. Now my team put some criteria in there and all those things. But when they did that for the auditors and the regulars, so we have to it's not our money, so we have to be fiduciary responsible. But I said to my team, I said, whatever rules you put in place, if I ever have a teller come here and say, I don't do any meaningful difference because I hate getting approvals, you will have failed. I want them to have the ability, because it's not actually about the money, right? I had some of my peers are like, your team's going to spend $10,000 in day one. And I'm like, no, they're not, because they have to share the story with the CEO. I actually think it's going to be hard to get them to do anything, right? Because they won't think their story is worthy enough. And that's exactly what happened. It took us 5 years to spend 10 grand in any 1 year. 5 years it took us. And we went from a handful of stories a year to now I think we're like 3,000 a year. Of meaningful different stories, and a lot of them are in the book. And what that is really just connecting with another human being, right? And being a part of the fabric of their life beyond the interaction and beyond the transaction. And so we've done that really well. But operationally, takes takes funding, and it takes training. If you just word of mouth because it's the right thing to do and it inspires everybody in a meeting and they all leave, you're going to have fleeting results. So you have to operationalize service. It's very hard to measure, but you know it when you see it, and you got to make sure that you put it out there.
So I'd like to take this to the next step here, because I think what you're saying makes a ton of sense, which is the human interaction is pivotal, and a technology like AI is enabling people to have more of those authentically human experiences. What could you maybe walk us through one or two use cases where, I think what's really really helpful is seeing what work used to look like, right? Or how work could have been done or was done 3-4 years ago, and what does that present state or maybe near term future state look like when it's enabled by more of the technology like AI that we're seeing? Because I think that's the discourse that is happening more broadly in the market, which is AI seems to, if used improperly, is going to lead to AI slop. It's going to lead to a disintermediation of the experience that credit unions are known for. And so, people like human members speaking to AI, if that becomes a norm, then you lose the thing that would otherwise make you special. There's a lot of pessimism around job displacement and things like that. So I'm curious, like, from your lens, where and how should the technology be used? And I think seeing that painted in, here's how things were done 3-4 years ago, here's how things are done today or in the near future, I think that storytelling would be really helpful to us.
Yeah, I don't have a ton on the AI side because we're just at the infancy stage of some of those
Mhm.
things. But the way we think about it here are, repositories for policies, procedures. AI is brilliant in that world, right? It doesn't touch the consumer. It really basically enhances my output of the human capital that I do have in my employees to be able to do their job more efficiently, more effectively, with more accuracy in a shorter period of time. That AI is beautiful from an efficiency perspective only when we implement it to ultimately enhance the human being. That's a very important piece, at least to me, because there will be plenty of companies out there who go the full technological route, and that's okay, and that's going to be their value proposition. But then they're in that ocean with everybody else doing that same thing, and consumers will follow it. They will penetrate the market, but then there's going to be some frustrations with it, right? Because there always is. We've been through this game before. I mean, as soon as technology, as soon as the internet, I've been in this since the late '90s. We've been through this the entire time, right? It used to be the big bank has 6,000 national locations. We have five. We're never going to compete on convenience, so we better really be good at service and really be really good at price. Well, then over the years, credit unions kind of got known as the kind of little nicer, a little cheaper place in town, but they might not be able to send money overseas. And that's kind of what we've been fighting for a while.
Uh-huh.
Technology comes along, and now it's like, hey, when my member moves out of my community, they can keep banking with me. So it made me have a huge upside in convenience, right? But it also added more cost to me. They have more money, so they could always be out with the next shiny object a little bit faster than I was going to be able to. So that was the negative, right? Every coin has two sides, right? So we've been facing this with technology advancements for a lot of years, and I don't think AI is any different. I think you will have a lot of humans replaced by AI. I think many of them might be replaced incorrectly and then come back later, right? One thing we never did is we never did a work from home in COVID.
Uh-huh.
We didn't do that. Why did we not do that? Because it was a decision that was nowhere within our strategy. We are a
Mhm.
intimate, small, local financial institution that says we're boots on the ground, we're local, and we're trustworthy, and human connection is our vision, right? So the reality is, for us, we were able to go to our staff and say, here's how we're going to keep you safe. We do have work from home opportunities and options. This is what it looks like. But just know we are an in-person workforce and always will be unless we merge into somebody else. Because my option at that time is, well, then if I don't want to be an in-person person first, that kills my strategy. I might as well go find the best technology credit union that's out there and merge up and into them, right? Because
Yeah.
I don't have
Yeah.
my value proposition anymore. If you can't answer the question as to why a consumer would walk out of a credit union or bank that sits right next to me, across my parking lot, into my branch and stay, you're in trouble because this world is competitive, it's moving fast, and you better have a value proposition that you stick with, and you better be disciplined enough to stick with it to work through it. So I will not replace my employees with AI. I will be enhancing them with AI. I'll look for opportunities within the market when other corporations do that. I'm going to go grab their talent and bring them over here, and I'm not going to let them take them back when they realize, hey, I don't know that technology is always going to do it. I worry more not what corporations do. I think our biggest hit, which might be a little further down the road, would be when consumers themselves have their own AI bots that do it. So now we have programmable money in the DeFi space, and I got an AI doing all the consumers. How do I get at them and build that human connection? I'm more worried about that than what any of my competitors do.
Yeah, I think that creates an opportunity in the market for you, right? Because I think your value prop and strategy, as you're articulating here, is very clear. And in a world where I think there will be a lot of experimentation, perhaps in some ways we'll go in the opposite or wrong direction, right? I think that creates a opportunity for you to then reassert kind of your frame and take advantage of it. Now, I do want to switch gears a little bit and talk about these interactive teller machines
Yeah.
because
Before you
you
go there,
deployed.
let me say,
Yeah,
before
go
you
ahead.
go there, I just want to say one thing to everybody listening. As CEOs, we look and we say, hey, as we're driving companies, every CEO is listening to this, every executive leader who's listening to this is going to be like, yep, you've been frustrated by this before. How many times have you been frustrated within your organization when someone says, that's the way we've always done it? And you're like, come on, we're trying to get better. We're trying to improve, right? The way you've always done it. Well, I would say take the mirror out as a CEO or executive leader and look in it and ask yourself that same question. Oftentimes when we talk about like challenges or risks or things that are going to impact our business, they're oftentimes going to impact us because the world around us is changing and we want to hold on to the thing we've always done. And I think that's a piece where you have to have a different mindset because the batten down the hatches, defense strategies, risk adverse strategies that have served credit unions pretty well for the last 96 years, I don't think they're going to serve us as well moving forward. And we have to be able to operate in a place where you don't have 100% certainty on everything. And as case in point, when I talk about new technology, you know what the first question people ask me is, how do you make money in that world? And I said, well, that's the wrong question right now. I can share with you how I think I'm going to make money, right? But let's talk a little bit about the fact that I just had $1 million leave my institution 3 years ago for an exchange, right? A digital asset exchange. And the second year was 5 million bucks, and last year it was 15 million bucks. So I'm not worried about profitability. I'm more worried about plugging the hole in the bottom of the boat and making sure that liquidity comes back. I replace that interchange, and then I go capitalize on the opportunities. But too many people look for the opportunity that's a sure thing with low risk. The world is moving too fast for us to continue to be relevant and operate that way.
Yeah, I think that requires changing some of the things that you've done historically, right? And be open to change. And I think that brings us to the interactive teller machines because, outside looking in, you would think ITMs, you've deployed them across 5 branches. Isn't that anathema to the strategy you have, which is humans first, experience first? So I'm curious, how do these interactive teller machines fit into your philosophy of balancing technology with the high touch member experience that you're known for?
Because I just improved my human experience. Because the reality is, the only thing I changed was the tube. We always had video monitors out there. We don't do the self transaction. They have the ability to do that, but 99 or 90, it's like 97% are still human interactions on our teller line or in our drive through. They are not coming into my lobbies, at least not yet. I don't see that as an opportunity where we're going to want to replace the human connection. But if I can get the machine to do the work so the human can focus on the interaction, that's how I look at technology. And when I looked at our drive-throughs, all we're doing is getting rid of the tubes. I have the ability to now run all of my drive-throughs from one efficient place. So in a scaling perspective, the money I save there, I'm redeploying my human capital elsewhere to go build new things, to keep scaling, to keep moving, to move in the world we just talked about where the pace is not changing. And so that is actually, to me, the best way to use technology when you're trying to add human connection. Where will it help you more than it will hurt you? So that you can do more human connection. And I think our ITMs and our drive-through are exact example of that because I can actually open up, now I can extend my hours with 4 people at every one of my locations if I choose to. But I actually think we have a story to tell. You do have to train your members to say, you realize if you really think about it, the only thing that changes the tube, hit the button, the person's still going to pop up, right? We also, by the way, did not get rid of our drive-through windows. Okay, so every one of our drive-throughs still has a window. So you know why that's important? When I remodeled our first branch where we put the ITMs, you know where I sat the people running the ITMs? Right behind that window. Because I wanted to build the human conditioning so that when they hit it, the person could say, I'm still here, I'm right here, and they could see them. Because I think that actually is not something where consumers were automatically getting over that hump because they didn't think they had human people to help them work through that machine. So they're intimidating. So they're like, I guess I'll just go in. I don't want to use this thing. But once they learn that the human being's still there and actually still sitting there, now we've moved them a little bit, so they're less concerned now as our consumer adoption continues to increase. But I would say in our surveys, our members aren't quite there yet. We still have some work to do. So, but I look at that actually as the way technology should be used in human connection versus the opposite of replacing it. Because right now I didn't replace it. What I did was I just ultimately made it more effective and efficient using technology to add the human being in differently.
Yeah, no, I think that's a beautiful way of putting this because I think you are enabling more human to human interaction, but you're leveraging technology to make that more viable. And all the savings that you get, you're deploying in more human experiences, right? And so I think AI, I think people forget that, yes, it can help save cost, and that is part of it. But the cost savings will be redeployed in other areas, and hopefully they were deployed in areas that make you more differentiated, which are a lot of these experiences that you're speaking of. And that then enables you to drive more growth, more member retention, more member growth through the word of mouth, and that's how you make this not an efficiency play first and foremost, but ultimately a retention and growth play, right? Because your product and service is getting materially better because you're spending more time and effort, the redeployed capital in those areas.
And I'm preventing dissatisfaction a little bit more often. Remember what I said earlier, right? The machines are typically more accurate than humans over an extended period of time. So I'm actually improving the level of times we might have had to recover from a dissatisfaction or a mistake that we've made, right? And so getting the humans out of the mistake business and getting them into the building of people business, and letting technology do the work in between is really how I see us going. And I see that same thing in AI, right? I've said it before. How do you get the extension, that coworker, and how do we ultimately keep building on an extension of the employee versus the replacement? Because even if the replacement has a higher return on that investment and consumers actually adopt it, I don't believe it's a long-term strategy for it, for sure, for not for our industry. Because if that is the answer of what consumers will demand, we're dead in the water anyways, because at the end of the day, we won't be able to spend as much on the technology and stay out there as fast as some of our competitors might be able to.
So Jed, on that bit, on AI and automation and spending on technology and adopting it, what is your current strategy? Because I think that's a challenge that we hear, which is largest of enterprise banks. Let's say they have 10,000 plus engineers working on this. They get partners like Anthropic knocking on their doors, hyperscalers like Microsoft Azure knocking on their doors, and they have Accenture, and they have their arsenal of people and partners around them. When it comes to a credit union of your size, you have a lot of things that are working really well, but you don't have the same technology resources and budget, but your customers still want more technology enabled experiences, as we've spoken of. So how does a credit union of your size and scale invest in newer technology like this? What is the strategy there?
Yeah, I think it's start with the member, stay with the member, end with the member, right? And everything we do around here is about prioritization, right? There's always 150 things for us to do at our sites credit union especially when you're growing as fast as we are, right? So our team gets into a place of saying, okay, when we're out of 150 decisions we have, what are the top 10? And then when you get to the top 10 of 150, do you understand the sliver of hair that is the difference between how important they are, right? It's every budgeting season we go in to say, hey, we could really use about 8 more people, but which 2 are we actually going to hire this year? Right. And so I think you have to get really good at prioritization of highest impact to your strategy. And that's why being disciplined in your strategy is so important. And I think the other thing is leverage what you have as an advantage. So you just described my credit union in a way of all the disadvantages I may have. And that's the side of the coin that we don't talk enough about of like, yeah, but I'm also competing with people who are like cruise ships. They're really hard to turn, right? I'm like a speedboat and I can get my executives in a room and I can make a decision. If I get off this podcast right now and I call a special meeting within 20 minutes, we can make a very important decision. Do you know how long it takes some of my $5 billion competitors to make a decision? Like 40 people in a room over 3 months and they're debating, right? Like, so I have some advantages there. I also can influence culture and the human experience more than anybody else because I could still get all my employees in a room every month if I want. My competitor down the street that has 500 employees, maybe once a year, if ever, they get everybody in the same room. So again, I wish I had more money. They can make more mistakes. They can invest more money. They can take more chances. We have to be more right more of the time, which means we have to be more disciplined in our strategy and all those things. But it doesn't mean we don't have advantages, right?
Sure.
I have
Yeah.
a ton of
Mhm.
advantages. And by the way, we have 28,000 members, 20,000 emails. Okay. When I send out 20,000 emails on our annual survey to our members, we get almost 8,000 of them open and almost 2,500 responses, which means I'm getting like 12 to 14% response rates. So if I'm asking the right questions and I'm asking them often enough to my members, I have an advantage over my bigger peers that I know exactly intimately what my members are looking for. And I also know what they'll give me a little bit of grace on. And that's the beauty of credit unions when you have that relationship. So that in real life, a real use case where this happened. If you remember, it was like 2015, 16 when Apple Pay came out, right? Whenever that was back then. If you read every periodical around that time, and I did, basically said your bank will be dead if you are not one of the first adopters and you do not run full speed at this. Your credit union will be gone, right? It's like it was table stakes. But when I went out and asked our members, they're like, I might use it. So I took my team and we do what we do. We said,
Mm-hmm.
go do the work. We're going to do the work before we have to. Because if you're a small credit and you do the work before you have to, it creates future doors you can walk through, right? With less human capital. Because if my members ever demand something from me that I don't have, I have to take all of my human capital and throw it at it. So we're very conscious about around here of saying, if you think of an old visual of an equalizer bar on a stereo for your younger generations, they might not know what that means. But the equalizer bar, we always look at the bars. Which ones do we need to move up a little bit, even if we're not going to execute, just so we know we are close to execution should we need to be, so it doesn't kill a full year of strategy for us in 2 years when our members surprise us and say, no, now we want it. So we started asking about Apple Pay, and we did it consistently. And I think we knew exactly within 2 months exactly who our partner was going to be. We knew exactly how we were going to launch it and what we were going to do. And then we didn't launch it for 3 years. Okay. So I think there's a little level of, for us, it's highest impact. And we have a method for us when we're talking of how does our strategic plan lead us in service? How does that break down into our current business priorities, which is more of an 18-month window? And then how does it fit within our 12-month window, which is a budget? So my board gives me 10-year goals of directionality. One of them might be perpetual organization, like I said to you. And I have to prove to them in my board governance that I'm creating a perpetual organization. So they have a measurement on directionality. I take that, I turn it into our 3 to 5 year strategic plan with our board. But it's our plan. It's not their plan. It's our plan telling them how we're going to equal what they just told us they want us to equal directionally. And then we break our strategic plan into 18 months. Business priorities. What are all the things we're going to do, whether they're task oriented, project based, or strategy based from a human capital? And then we meet weekly on our human capital. And then we break our 18 months into 12 months. And that's what our budget is off of. It's saying, hey, board, you know what our business priorities are. Over the next 12 months, these are the ones we're going to focus on.
I'd love to understand. 2025 was a great year for you. What do the priorities look like, and what does success look like for 2026, or let's just say maybe even the next 3 to 5 years, right? Because there's a longer roadmap and arc around the adoption of some newer technologies like AI, and I think there are some very weighty conversations that are happening at credit unions across the board, which is how do you stay increasingly relevant in a world where there's just so much change, right? All of us are feeling change, the companies that we run, because there's this big AI transition that's underway. So I'm curious, great 2025. What does 2026 or next 3 to 5 years look like? What are the priorities for you?
Yeah, so for us, ours is always growth mindset. We don't believe we're a survivor. When I got here at 100 million, now we're 430. The beauty for where we're at is we could be twice our size. We just never had the net worth. When I got here, we had 817. So to organically grow by 430%, it's hard to do, right? With the ROAs that we post every year, right? So for us, it's continue the growth model. We want to have 50,000 members and 1 billion in assets in the next 5 years, which is doubling our size, right? So we've quadrupled it in the first 11 and a half I was here. And the next 5, I want to double where we're at today. I think we have the business to do it. We have to continue to develop our income streams and able to move that fast because that's really what we're faced. It's a great problem to have. Most of our conversations here are oftentimes how fast can we allow growth to go
Mm-hmm.
with what we expect our return to be, right? So we're not oftentimes looking. We've built out a really talented team. We have a ton of levers in our balance sheet. So from cannabis banking to multicultural to indirect lending to direct lending to mortgages selling to secondary market, some stay here to our SBA. We're the number one SBA lender for credit unions in Minnesota after 3 years of doing this.
Uh-huh.
So we have a lot of levers we can lean on, and we're gonna have to lean on all of them differently over the term to really build our income streams because we're not gonna make that through the ROA at that growth that we need to actually grow that fast. So that's always number one for us is to identify the best path forward to be able to do that. Um, from a technological standpoint, we're still actively working. We just launched the CU Digital Asset Vault, the first in the world where members can store their digital assets at our credit union off balance sheet in an industrial grade technological solution. As soon as regulation moves forward, actually, the Minnesota representative that we're working with that wrote the bill with us is actually on Fox News, I think right now, actually talking about it. but that's going to get heard here
Mhm.
moving forward as soon as custody comes. So we've been pushing regulations both nationally and locally. As soon as we have custody, we'll build out that entire platform because we already have it built. I can do Bitcoin Lightning Network payments right in my core, deposits, lending. I can do exchange right in my core. All my technology is already built to turn those on as, and then really go out and use that as market penetration and our growth strategies. Cannabis is something I said 2 years ago. Minnesota came. We said, hey, if they're going to operate, we want to operate those businesses. So we have a lot of opportunities there as we continue to move forward. And then to your point on AI, it's for us to really ultimately dive in, right? This is our first year. I actually have my CTO going to a 12-week course at MIT. I'm investing in his training along those things. Outside of that, I'm personally testing two different AI modes on my own. I have two other executives testing other versions, and I'm not just talking Grok or all those things. We actually have specific testing modules with identity and some of the things I talked about earlier, where I actually have one where it's building my identity that I'm trying to get to a level where I can actually plug it into any AI that I want. Then it can learn about me before I prompt it to answer whatever question I'm asking it. Working on things like that to see how intimate AI can be before we launch, while he's also then studying where are the low-hanging fruit, right? Where are the repositories, the AI that can do our procedures and so that. You'll see some of that from us. And like I said, in our fintech, we have a coworker, so I've gotten great experience with that. I love it. It's fascinating that I can actually prepare for a conference I'm speaking at in a matter of hours, not days now, with all of the data I'd ever want. I mean, literally, the AI coworker that I'm using will literally bring up something I've said in a previous presentation as something I should say again in this presentation. That intimacy is really where the magic of AI has, I think, a ton of upside for human beings. That's really cool that it can do that. It's fascinating. We in our fintech, we also do core conversions. Our fintech is Deland QSO. We've been doing it since 2009. We've been around. We're not a startup, by the way. The QSO that we purchased, but we actually can take AI and I can do a virtual merge of two credit unions or a conversion from one core to another with AI, and I can get the entire subset of everything that went wrong within minutes to go figure out versus a report that said, we think there's something wrong, go dive in and figure it out. What would take us about 2.5 weeks of individual time to go dive into. So now we can do a virtual merger or a virtual core conversion in minutes and then identify how to do. There are huge opportunities for us to involve. So you'll see some of that from us. We're also doing some social things. Like you're going to hear some announcements from us probably in the next 4 months. We'll be one of the first in the country that's been working on some technology for people, women and children of domestic abuse. We actually have a partnership with CU Safe. We'll be one of the first in the country to launch it, some technology that actually allows them to work on their phone, contact, call without their abuser finding them. We have a partnership with two local women's shelters in town that's partnering with us to really give another tool into our community for people who are facing financial abuse, because one of the things that keeps them there for the longest are finances. And so if we can give them more tools and access, we're excited about that. So that's something new and innovative. But again, where does that come from? It comes from us looking at our community, saying there's a need that we can be a part of solving. That's why people love that we're in their community and have a credit union that's local and not this national 30 state institution. So we're going to double down on more of that and see where we land.
That's amazing, Jed. I really appreciate you sharing that with us. I'm looking forward to all those announcements as well. And I love the ambition doubling in size in the next 5 years. So I will be watching from afar and hope to have a follow up conversation with you and see how that journey is going. But truly appreciate your time today. Thank you. Thank you for this, Jed.
Thank you so much for having me.